everyone, it's Kimberly Diamond from Real Estate TV SGB, Southern Georgian Bay. And today I am lucky enough to have Rhonda Crocco here, a mortgage professional with Real Mortgage Associates. Hi, Rhonda.
Good morning. How are you?
Good. How are you?
Good, thank you.
Thank you for joining me today. Today, we're going to be exploring the significance of a strong credit score, a discussion on kind of credit repair and the maintenance. So, Rhonda, why don't we just start? Can you tell everybody a little bit about you and how long you've been a mortgage broker?
Sure. So I started brokering approximately, I'm going to age myself here, approximately 23 years ago.
Wow. So you've been doing this a long time. Fantastic.
I've been doing it a very long time.
Good.
Yeah.
Okay, perfect. Well, I think with no further ado, today we just want to kind of focus in, like I said, about, the credit repair, maintenance, the importance of it. And there's no better person to speak to about that than you, and just kind of, helping the public who are listening today, how they can, get above the 700 and into the eights even. So,
right.
Yeah. All right.
Okay.
So take it away, Rhonda.
Okay. So let's just talk about credit in general. So,
Sure.
Really, what you don't want to do is you want to avoid carrying balances on your credit card. So, as you know, if you buy something on sale, but you're not paying it off, you're paying more than retail anyways. You're paying way more than the sale price because
Very good point.
Being charged. And that debt is going to sit on your bureau. So let's just use a small example. You have a $1,000 limit on your credit card. I know most of those limits are higher, but for the sake of our example, let's just use a $1,000 limit, and you owe $800. So you are owed 80% of that limit. Your credit score is going to start to slide down, and it's going to continue to slide down as long as you sit there or higher. Ideally, what you don't want to do is owe more than 50% of a credit card limit. Now, I know there are times where, your furnace breaks, something happens, and you need
life happens.
Credit. Just try not to leave that balance owing sitting higher than 50% of that card's limit. Always make your credit card payments on time, all the time, including things like Rogers or cell phones, because they do report to Equifax. So anything that reports to Equifax, you want to pay on time, all the time. And if you are that person that's really busy and you think, I'll get to it, then just call your bank and set up the minimum payment to come out of your account. And that way you're always on time. And then you can go in and make the extra payments on your own.
So just to elaborate on that a little bit. So 1 month, my minimum payment is $86, and the next month it's, $101 for a minimum payment. So they can do that. The banks can set that up. So your minimum payment is always met.
Correct. They can take your minimum payment out of your bank account automatically as long as you set that up.
And that way you're not missing it by a day or two or a week in our busy lives.
That's right.
The payment.
Right.
I love that. That's great advice. Okay. What else can we do?
Well, we can talk about the importance, obviously, of not carrying credit debt. And this goes for both sides. This goes for our new buyer who's not in the game yet, and it goes for our seasoned homeowner that's coming up for renewal. Mm-hmm. So you want to make sure that your credit is good because you want all the options available to you.
Yeah.
So the better stronger and better your credit is, the more options you have. The less debt you're carrying, the more options you have. You can't live in your car. So a $700 or $800 car payment probably isn't ideal, especially when you're trying to get into the game or your mortgage has come up for renewal and you want to move it to another bank. Because even though your mortgage is transferable, you can switch it at maturity to another bank, you still have to qualify to do that.
Right.
So if your credit isn't decent and you haven't been able to maintain a strong bureau, you might be forced to stay with the bank you're at and simply renew it.
And take whatever interest rate they're going to dish out to you, essentially.
That's right.
So, and that's, I bet, frustrating for you when you see that, when people come to you to refinance and they've accumulated a bunch of debt, and you know that you could get them a better rate, but had their debt load not been so great, I guess.
That's right. And it's not necessarily the rate even, it's the type of mortgage,
Right,
So
okay.
You just want to make sure that you have every option available to you.
Right. Okay. Fantastic. So, we're on lean times out there. I think, the cost of everything has gotten super expensive. You know, so what would you recommend to people that are carrying, let's say 70% on their credit card, and they have that car payment and what have you, like kind of maybe look at getting rid of the car that you can't live in, buying something.
We do need a car. We need a car because we need
100%.
We need it to
Sure.
get to work. But like I said, we can't live in our house. We can't live in our house. So
In our
I would
car.
look at, let's say you're carrying the debt on multiple credit cards, for instance.
Yeah.
Take the credit card or line of credit with the lowest interest rate and the largest limit and transfer all of the debt onto one card. Now you're concentrating on paying one debt only, and you can pay as much as you possibly can on that one card. Don't use the other ones in the meantime because you're defeating the purpose. But you
Right.
need to target the debt and get rid of it as quickly as you can. So key is to save as much money as you can. Don't carry credit card debt. Consolidate the debt onto one line of credit if you can, to pay it off.
Okay.
And
Does the credit bureau find it more favorable instead of having, 4 credit cards that are all, 50, 40, 50, 60%, and kind of amalgamating, like you were saying, putting it all on one card and not using those other cards anymore? Yes, you're going to have a higher balance on one card, but I can definitely see what you're saying about like the train of focus is just that card.
that's exactly it. It is the train of
Not to
focus.
mention
Now, it's
interest.
likely that line of credit is going to be hovering at that 80% or higher for a little while.
Sure.
And that may affect your score for a short period of time.
Yeah.
But also paying off the other debt and not carrying so many balances on your credit report is
And
also going
interest.
to affect it for the better.
Okay. Gotcha. So that's important.
Yeah.
Okay. What else can we do to kind of maintain? I guess that one thing I know with all the credit fraud, etc., we should be doing our own credit report or be checking into that. What yearly? Like, what would you suggest?
You're
about
entitled to a free report every year from TransUnion and from Equifax. So you're just going to Google Equifax free report or TransUnion free report, and they'll walk you through how to obtain that. It is your right, and you should be doing it to make sure that what reporting on your bureau is accurate, right down to your birthday, your social insurance number,
Yeah.
your address, your place of work. Make sure everything is correct, and nobody has gotten into your credit and applied for credit in your name.
And I think that that's super, super important these days in this, we're
And another
always...
thing, sorry to cut you off, another
No,
thing to
that's
really
okay.
watch for, because I see this a lot, is somebody's moved or they've changed providers. They were with Fido, and now they're going to go with Rogers, even though they're the same company.
Sure.
Each entity has its own equipment. So the Fido equipment doesn't get returned, and you don't think about it at all until
course.
they put a collection on your bureau because they want their equipment back. So it's
Wow.
important when you switch providers, move locations, etc., that you do call those companies, find out how you return their equipment, and keep a record of that return. Because let's face it, at the end of the day, we are people. Behind every transaction is a person. We're not perfect, and we make mistakes. So you need to cover your butt, so to speak.
Yeah, no, I love it. That's really good advice because, I think about that for a potential purchaser or whoever, whether you're refinancing, to put yourself in a situation where you're not able to purchase a home over equipment from a cell phone. That's pretty scary, right?
Mm-hmm.
How that could impact your life.
Right?
So,
And you might not even know that collection's there. Maybe your phone number changed. I don't know. You might not know it's there. So if you don't request a copy of your bureau in addition to making sure you have all your documentation in order,
yeah.
you'll never know until it's too late. You won't know until it's too late.
And you have to check both Equifax and TransUnion, correct?
Yes. Now, most mortgage companies are going to run Equifax. Most. But some do rely on TransUnion. And both reports are not necessarily the same because not every financial institution reports to both.
Okay, so that's interesting. So what I'm going to do, everybody, I'm going to put the links below for TransUnion and Equifax, and I'll try and put the Freeport hyperlink right there for you, so you can just click on that and input your info. And like Rhonda was saying, it's super important that we're staying on top of our credit. It's our responsibility to ourselves, really.
Absolutely.
And I know that you had made another good point too on a deal that we had recently done with respect to the same name in a family dynamic. So do you want to just
Sure.
kind of touch on that a little bit?
I'm just going to use a generic name like
Of course.
John Smith. Okay?
John Smith, yeah.
So John Smith Sr., John Smith Jr., and John Smith Jr. are all in the same family. They all bear the same name, and sometimes the credit bureaus get entwined. So I have had situations where John Smith Jr.'s credit is showing up on John Smith Sr.'s credit bureau. So when we have same name and family, it is my recommendation that every time you apply for any type of credit at all, including your mortgage, you use your full name. So if you are John Mark Andrew Smith, then you use John Mark Andrew Smith. Every time you apply for everything, you use the same name every time. And then the chances of these bureaus being entwined.
Right. Yeah. So if, John Smith Jr. doesn't really care about paying his bills, John Smith Sr. isn't paying the price and the headache of that. Yeah.
That's right.
And
that's
he can.
exactly it.
Right. No, that's very
Or
scary.
maybe John Smith Jr. has two large car payments, and John Smith
Yeah.
doesn't.
Right.
And then his borrowing power will be affected because that debt's sitting on his bureau.
And it's not even his.
And it takes time to get the bureau corrected.
Oh, good
So,
luck.
you're in your negotiations, you're wanting to pack and move. Well, you can't because you got to wait now because you have to send a request to Equifax, then you have to wait for somebody to look after it.
Yeah, and that doesn't happen within a 24, 48-hour window. Good luck.
No.
You're at their mercy, essentially.
Right. That's right.
Yeah, and your life is being put on hold. So that is really great advice. Make sure that you're using your full legal name just to avoid any conflict like that. Because like you say, there is still human error that happens. And that's not a situation that you want to find yourself in by any stretch.
No. If you don't mind, can we touch on one little thing that I think is really important right now?
Yeah, please, shoot. Go ahead, yeah.
So, as you know, a lot of people were able to obtain mortgages with interest rates south of 2%.
Yes, they were.
That likelihood is likely not going to happen again.
No. No.
Historically, anywhere between 4 and 5% is a pretty decent mortgage rate.
It is.
But what I'm noticing is that some of those mortgages are coming up for renewal. So they're paying 3.09 or 2.59 and in some cases lower. And they're being forced with a renewal offer of 5% or a little bit higher.
Yeah.
The problem is that they are forced in most cases to stay with the institution they're currently at because on paper they don't qualify for the mortgage anymore because the interest rate is that much higher. So in an effort to ensure that you don't have much higher payments on renewal, and B, that you have options and the availability of many institutions to do your mortgage, if you can, and I do recommend it, if you can increase your mortgage payment now by whatever the bank allows you. Most banks allow 20%. So if your payment's $100, they're going to allow you to increase it to $120. So I recommend that you take advantage of your prepayment options now so that when you come up for renewal, you owe less. You owe less. It's not going to hurt as much to pay a higher interest rate, and you're going to have more options.
And we are going to be seeing, well, we are already seeing that, aren't we, Rhonda? A whole lot of this, where people locked in at the lower interest rate. And, so just to be clear for the public then, They have an interest rate with their current bank. Their mortgage is coming up for renewal in 6 months. They being homeowners, current homeowners.
Correct.
And they will not qualify. They call you and say, Rhonda, the bank's offering us 5.09 for, you know, a 3-year closed or 5-year closed or whatever. But we'd like to see if you could get us a better rate. Now, because they are maxed out on their credit cards and they're, you know, well above the 50 or 80% kind of thing, they're not going to qualify at other lenders. So they are stuck with their bank. With that being said, the bank, because they have an existing mortgage, the bank cannot turn them down, I guess, is ultimately my question to you. Regardless of their debt load, the bank can't say you have to sell your house.
In all likelihood, no. 99.99999% of the time, as long as you have fulfilled your obligation and contract to that
Making your monthly.
and paid your mortgage the way you were supposed to, they will renew you. They will renew you. I just want to back up a little bit on something you said, though. So maybe that homeowner that's up for renewal doesn't carry debt, doesn't have big car payments, doesn't have any of that stuff, but that increase in interest rate is making them not qualify somewhere.
Right.
That's possible. Okay?
What's
so that's why I suggest you owe less. If you owe less, you have more options.
So Rhonda, the other thing I'd like to touch on is the stress test. Can you kind of explain what that means?
Sure.
So the public gets a better understanding of that.
Sure. So there's a few things involved in that stress test, and the most prevalent one is that it used to be that if the rate was 5%, you qualified at 5%.
Right.
Now if the rate's 5%, you qualify at 7%. So it's 200 points above the rate or the benchmark rate, whichever's greater. The benchmark rate currently 5.25. So with the example of a 5% interest rate, you're not going to qualify at 5.25. You're going to qualify at whichever's greater. In this case, 200 points above 7%.
Can you tell me why the stress test was implemented?
They would
be to protect the banks, right? To make sure that if the interest rates fluctuate.
If you ask the bank, it was to protect both sides, really, because if the interest rate went up considerably, chances are that those borrowers could no longer afford their mortgages. Yeah. So that's why they did it. Another thing that they do is, let's say you have a line of credit and you owe $10,000 on your line of credit, and your monthly interest charge, let's just say it's $50.
Sure.
And $50 shows up on your credit bureau as the payment. For qualifying purposes, all repayment on any type of credit card or line of credit debt, any revolving debt, is 3% of the balance owing. So in the case of this line of credit with a $50 payment, on paper the payment is $300. So that decreases your borrowing power.
Ooh,
right?
Yeah, that's interesting.
And that's another reason for not carrying debt if you can avoid it.
Right. Okay. It's getting definitely more difficult, the last few years to get a mortgage, but at the same time, it is kind of a forced means of protecting the public, I think. Not kind of getting in over their heads and what have you, right? Because I know that I've worked with many sellers, like I've said before, champagne taste on a beer budget, right? And what buying a home, we can't have it all at the beginning or what have you, and that's just from a real estate perspective. But I think that we, as a society, especially in this day and age, tend to get kind of caught up in living beyond our means a little bit. And I always say I like to live below my means and know that I have that cushion of safety there at all times. But is there anything else that you wanted to touch on before we wrap up today, Rhonda? How somebody can help repair the credit or just maintain. I think in terms of maintenance, we've definitely spoken about doing the annual credit report, the free credit report for ourselves. That's super important, especially in this day and era.
Absolutely,
with all the fraud.
That any person in financial services, any broker, any bank, any accountant will will help walk somebody through
Yeah.
to help them repair their credit without going into, proposal or something like that. And that's a totally different topic. So,
Yeah, and even if somebody is looking at perhaps buying a home or what have you, they could give you a call and just say, "Here's my plan. In the next 12 months, I want my credit score is sitting at 620, and I want it up
Absolutely.
to 700 or wherever. So how do I get there, Rhonda?" And you can kind of coach them along, so that when
Absolutely,
they do, which is super
absolutely,
important.
I can provide the tools.
Yes, that's right.
I can
And sit
provide-
down and this can all be done online, on the phone, or what have you, right? So,
Yep.
Okay, well, I think that I really appreciate you taking the time today. And before we go, 5 fun facts in 5 seconds or less.
No.
So we get to know Rhonda Crocco for Real Mortgage Associates just a little bit better. So, your favorite way to spend a day off?
Oh, hiking.
What's the phone app that you're currently using the most on your phone?
Probably my text, I guess. Like, is that an
Text?
app? Is that an app?
I don't think so.
Maybe
Mine's Instagram.
Pinterest.
Pinterest is your, yeah.
I'm decorating my home right now, so.
Oh, yeah, so there you go.
Yeah.
Your favorite holiday season?
Oh, I like them all.
Like them all.
I can't pick.
Okay, what song gets you on the dance floor?
We're here for a good time, not a long time.
I
By Trooper.
love it. That's such a good song, and it's so true. And lastly, cook or order in?
Cook.
Really?
I love to cook.
I'm an order in.
No.
Rhonda, thank you so much. I do appreciate you taking the time today. And of course, I'm going to link all of Rhonda's information below, so you can certainly feel free to reach out to her at any time with any of your mortgage needs, questions, etc. And certainly, whether it's credit or refinance or you're buying a new home. Rhonda is definitely the person that you want to reach out to. So I'm wishing you a great day, Rhonda. Thank you again for your time, and we'll be chatting real soon.